Hey traders from all over the world, how's everyone doing? Hope you're doing fantastic. My name is Jerremy Alexander Newsome, and I'm the CEO and co-founder of a company called reallifetrading.com. And our mission is to enrich lives. Our goal with that, of course, is to teach people from all around the world how the stock market works and how you can properly and safely invest in it. In this particular video, we're going to cover something called candlestick analysis. Specifically, we are looking at the tweezer top and the tweezer bottom candlestick pattern and discussing how you can trade those. The cool part about this particular pattern is, of course, it works in any market. Doesn't matter if it's futures, if it's cryptocurrencies, if it's Forex, if it's stocks and options. This pattern is a very, very powerful pattern. What's also exciting is I also have a free candlestick ebook and plenty of other candlestick resources in the description box below this screen. Make sure while you're scrolling down there, click that red subscribe button. I post free content all the time, and I really hope you like this video. So let's go and dive into some charts, look at some individual trade setups, look at some tweezer tops and tweezer bottoms, and discuss a little bit about how to trade those. And we're diving in. I could have made this a lot simpler on myself by scanning for some tweezer top patterns and tweezer bottom patterns, but I'm not. I'm not going to automatically scan. I want to kind of do it with my eyes. Number one, just to practice and hone my skills, sharpen the sword. And number two, to show you that, it can be done. You got to kind of look for them. So let's first talk about what tweezer top patterns are. And let's kind of discuss them. First and foremost, I'm going to try to track one down because it is always easier to find the tweezer top and then describe what it is, but this is going to be close enough for our purposes right now, and then we're going to nail down the exact definition. Let me get my little text box pulled up right here. Perfect. And I'll put in textbook or perfect tweezer top occurs when you have a bullish candle followed by a bearish candle that have the exact same high. Exact same high. Now, when I say high, high equals wick. All right, so it does mean the wick of the candle. The exact same high. Now, this is one I was looking at just before we started. And you'll notice, and I'll kind of point to the top of the screen right here. All right, so keep your eyes on the high, the H, so 40.09 and 40.14. That would make this not a perfect tweezer top. All right, the tweezers, the high has to be the exact same. White candle followed by a bearish candle. At the onset of this video, it's important to know that the name of this pattern doesn't really matter. You could call this whatever you want. So if you don't remember the name of it, or you don't remember the exact coloration or whatever, what's most important is that you know the sentiment. That's the important thing, knowing why this is a strong pattern. And think about it for just momentarily. If the stock is going up, going up, going up, and then it pauses right here on whatever time frame you're looking at, let's say the daily chart, and then the very next candle, the exact same high to the penny, and then the stock reverses and pulls back. Those are really powerful signals, and using that is very advantageous to go and look at, all right, this is a strong resistance at this point. I'm expecting the stock to either pull back or rest or just not go higher initially. And the cool part about this pattern is when you're looking at a tweezer, if you are going bullish, it gives you a very obvious signal. So if you're looking at a tweezer top pattern and you're saying, okay, this is a tweezer type of candle pattern, I'm looking at this and I want to go bullish, that's fine. Wait for that candle to break above and close above that high. And that will be a very strong pattern. A break of that tweezer is a good bullish signal as well. So if you're looking at going bullish and you see a tweezer pattern, then you can say to yourself, okay, this is fantastic. I'm going to look to go bullish once it closes above there. However, this video is called, of course, how to trade tweezer tops and tweezer bottoms. So the actual how to trade this aspect is when you find a tweezer pattern, your entry is simply below the bearish candle and your stop is above the bearish candle. It works magnificently better. We're going to look at plenty more examples. It works a lot better if the bearish candle is larger. All right, if it's larger than the white candle, this pattern works even better. If you have a candle pattern that looks something like this right here, all right, so this again is not a tweezer top, it's kind of close, and I'll look at some exact tweezers in a second. Bullish candle followed by bearish candle. So the highs of these candles are off by 11 cents. So it's close, but if it was a tweezer and the candles were the exact same high and you had this gnarly bullish candle, you would be waiting for a break of that bullish candle first. So if the second candle is really pathetic, kind of lame, kind of boring, it's still a good pattern, but you want to wait for the break of the bullish candle before getting in. Same instance applies. Let's say this was a tweezer top, which we can obviously see it's not because of the giant upper shadow, right? The high is way up here and this high is way up here, so that's not a tweezer top. But let's say it was this huge, magnificently large candle. You don't really want to put your entry below there and your stop above there, although you can. The risk reward is just not that great. So at that point, if you have a huge candle like that, you're going to be zooming in a little bit probably to the hourly chart and try to extrapolate some of that data on the shorter term level and play it a little bit more aggressively. And we can see that would have worked out decently well with that particular plan. But if the candle is huge, it's all about risk reward. Same kind of pattern right here, right? These candles, a very strong reversal pattern. In fact, this particular candle right here is a one black crow candle, one of my favorite candles. Tweezers are actually a little bit more rare. A little bit more rare. Harder to occur. They are much more powerful. Tweezers are. I'll just put tweezers. Tweezer patterns. Tweezer patterns are much more powerful on stocks above $30. If a stock is under $30, I'm not saying it can't work, but you could obviously understand that it's probably easier if the stock is cheaper because there's less movement in the stock on a day-to-day basis and there's less fluctuation, less prices, and therefore if there's less prices, the chances of hitting the number is greater, right? If you were spinning a wheel to get a prize, you would prefer to spin a wheel with 30 points rather than 150 points. Pretty self-explanatory. Let's go and see if we can find one on Under Armour. I'm going to look for a tweezer bottom or a tweezer top because the cool part is they trade the exact same. I'm looking at these with my eyes. This one's very close to being a tweezer bottom right here. So the lows of these two candles, the low of this bearish candle, right? This is the tweezer bottom, and the low of this is 37.67, and the low of this is 37.64. So it's 3 pennies away from a tweezer bottom. The entry would have been above the high of the bearish candle, with a stop right there. And obviously you can see the very next day it gapped down and you did not get a chance to take that trade. Or it would have canceled your order, right? Traded back down to the support, and that's where you could have bought. Could have bought the support. Also, just on a side note, if you hop over to a really cool website, reallifetrading.com, you can go over here to articles, and I'll also post a list of this below, but you can type in tweezers, and I have an article about trading, let me see if I can find it, trading the tweezer bottom right here. So I'll be including that in the description box below, along with some other candlestick cheat sheets and whatnot, but that'll also be down there as far as the tweezer bottom. Let's go look and see if I can find one. This one is 4 pennies away from a tweezer top, so that was pretty close. Let's keep looking here. And again, I could scan, but I like not scanning because it gives my eyes the workout of looking for patterns. Those highs are not the same. These highs are pretty close, about 10 cents, but not quite. And if you find any, of course, you're welcome to let me know and post them in the comment section below. I'd be happy to look at them for you. Tweezer top. Again, they're a little bit more rare, which is fine. And this one's very, very close. This one will be good enough for right now. And the reason I'm bringing that up also, because this is kind of important, if it is close like this, and you want to call that a tweezer top, all I would say is that's fine. It's not a perfect tweezer top, but it's good enough. It's not bad. Okay? It's like, would you rather live your entire life with no brownies at all, or is it okay to get some brownies out of the box? Maybe not some homemade brownies, but some out the box are not that terrible. This isn't one of those examples. The highs of these two candles are almost identical. 50, 91, and 50, 89. 2 pennies away from each other. What's interesting also is if we actually kind of zoom out of here a little bit and just kind of backtrack. This kind of goes without saying, but I'll say it. This pattern is a lot stronger when the trend is kind of extended. Right? It's already made a very strong bullish move into some magnitude. And of course, you have a retest gap right here anyway, right? White candle gapping up. You can still add all of the information you've already learned from real life trading and couple it together with this analysis. You can use the gaps. You can use one black crows. You can use support and resistance. You can use moving averages. You can use all of that for this data and for this information. Keeping in mind on this particular pattern right here, being very close to a tweezer top, even though it's not exact, it's not perfect, very close. You have 2 choices with that particular pattern, maybe even 3. Let's say that you were in this trade bullish, right? And you were already in Under Armour and you bought old resistance, new support. You bought there on a retest because it's a retest gap, white candle gapping up, so you bought on the retest, and now you're already in. So if you're in bullish, you get to decide a few things here. Do I want to protect myself with put options? Right? Do I want to have a trigger for put options right there? Do I want to sell a covered call right here? Do I want to do both of those things and get into a collar? Maybe you don't have enough shares, right? You have to have at least 100 shares for a covered call. Maybe I don't have enough. So do I want to put my stop right here and get trailed out? Do I want to exit for a profit right before the market closes? It's totally up to you. You get to kind of determine that. And let's say you are not in bullish yet, and you've been waiting and waiting and waiting, and you're like, oh man, you waited obviously way too long. But let's say that you're not in bullish. This is a phenomenal signal that says, okay, if you're not in bullish, wait a little bit. There's a pullback that's about to occur. Potentially. And if the pullback occurs specifically somewhere into this retest gap, that is where you'd be looking to trade that bullish. Right? You would allow that to pull back and actually retest. So if you're not in bullish, hey, cool. Wait for it a little bit longer. Patience is often the biggest determining factor of if you are profitably trading or not. Now, let's say you're not in the trade at all and you want to go bearish. Well, remember, the first thing I'm looking at when I'm looking for a trade is the trend. I'm looking for what is the trend. The trend right now is bullish. It's simple, right? Bullish trend. So this would be a pullback, retest, retracement, whatever you want to call it. This is a pullback of some magnitude. And if you are going against the trend, you better be a little bit faster. Meaning if you're going against the trend, in and out. Make some quick money, and then reanalyze, reevaluate the trend, give it a week or 2 and see what else it's going to do. Most of the time, you will find tweezer tops going against the trend because most stocks go up. Most stocks are going higher. Just because you get a tweezer top doesn't necessarily mean that this is the highest that the stock will ever go. In fact, that's very rarely the case. Sometimes it is, but most stocks go higher. In this situation, therefore, on Under Armour, what we would like to look at, what we would like to see is, if you're looking at getting in bearish, what's also cool about this is you could kind of extrapolate this to being an evening star reversal pattern, because you had a white candle that gapped up into a second candle, and then the second candle did kind of have an upper shadow and a lower shadow. So you could say, all right, this looks a little bit evening star reversal-ish as well. Again, it's an even stronger candlestick pattern if this happens. If this candle is a one black crow, which means it opened lower than the close of the previous day, but the highs are still the same. It's one of the strongest candlestick patterns you can have ever. And it's just, you see that, I'm more or less going bearish. So it looks something like this. You get a bullish candlestick, I'm freehand drawing these candlestick patterns, guys, so bear with me. But then you get a bearish gap down, right? It opens lower than the close of the previous day, but at some point during the day, it still trades up all the way up to the high of that previous day, but those highs are the exact same, and you get a one black crow candle? Oh my gosh. I mean, I'm taking that trade. It doesn't mean it's going to work, but I'm getting in it. And that's a very, very strong pattern. This one is pretty close to that. You can see that it's not a one black crow. It's more of a bearish engulfing candle, which is also a really strong candle if you get a bearish engulfing tweezer top. So the answer to your question is yes, you can combine other candle pattern sentiment with your tweezer tops if it's there. It rarely is, but if it is, you can use it. So in this particular situation, what I would say is I wouldn't get in bearish until a break below here with a stop right here. So I'm risking $2 on that trade. And it triggers in. As it begins trading sideways, at this point, I'm starting to pull up my moving averages and see what we bounced off of, so to speak. But this is that quick move, right? This candle pattern and this candle pattern those are the quick moves. Even though you get a tweezer top, if the trend is bullish, it's a quick thing. You don't want to expect this to necessarily go to zero because it probably won't. In this situation, let's say I'm taking this trade. My stop is still at 51. I'm just going to redraw my stop in here. My stop's still above the wicks of these candles. I've been in the trade for about, 5 days now. I'm going to give it 2 or 3 more days to go lower, and then I'm going to lower the stop. That's not looking good. That's not looking good. That is very close. What's the high of this candle? 50.84. 50.84. So I'd be able to lower my stop by about 4 to 5 cents. The strength of that is also very strong because, again, it's still not breaking that resistance. So even though this is not a tweezer top, it's a shooting star at that exact same resistance, this is a little bit more of a bearish movement. Now, if we close above 51, it's going to go higher. But if we do not, it's going to go a little bit lower, and there she goes. So really good breakdown, good little bearish, good bearish candle. Let me pull up the moving averages. They're probably going to change. Okay, so it closed below the 20. Yep. So in this situation, true story. I mean, if I was trading counter trend, I probably would have gotten out around here somewhere just for a quick little move. And then I'd look to get back in based on this candle because this candle represents a whole new range of candles. That's a one black crow. It's a bearish gap and go. Volume is increasing. You have this double top looking thing because it traded right up to these exact highs and failed. So there's a little bit more bearish momentum here on Under Armour. So based on this candle, I'd be looking at getting in bearish, and there she goes. Just a nice move. So anyway, kind of go back to you're looking for a tweezer bottom if I can find one. This is 2 pennies away. So let me turn off the moving averages here for a second. 2 pennies away, right here. Very, very close to a tweezer bottom. But you'll notice we actually gapped up the next day. So since you're gapping up, obviously with this tweezer bottom, your entry would have been here, stop would have been there based on how to play the tweezer, but you wouldn't have gotten in the next day because it gapped above your entry. But what you do is you look at that gap and you go, okay, this is a retest gap. So since it's a retest gap, you're looking forward to retest, which is this pullback right there. Old support trades right back down to that price. That's where you're getting in. You're getting in bullish right here on this candle, on that pullback. That's where you're getting in, right? You're not waiting for confirmation. You're not waiting for the candles. You're getting in on the pullback, right? Because it's a retest gap. That is the retest. And your stop could have been down here somewhere. Down here would have been more conservative for sure. But that's how. And that's what caused the stock to bounce, is people doing exactly that. They got in early, right? Stock bounced. We broke above that tweezer top-ish pattern over here. And you can see, as I mentioned earlier, we did go higher, right? Breaking above that is a big deal. And we did move up more at that point on Under Armour. All right, let's go back and see if we can find some more. Again, tweezers, a little bit more rare. 4 pennies away, this one right here. 4 pennies away. But this is very close to a, or I would call it almost a perfect tweezer bottom, but it's a bullish engulfing tweezer. So if you're not already in at this support right there, nope, you wouldn't have gotten in. Okay, so you probably wouldn't have gotten triggered in there. So if you're not in there, your entry is above the high of that bullish engulfing candle, stop below the tweezer bottom, and you got rewarded a week later. Not bad. Also, a white candle gapping up, or a bullish candle gapping up, which is a retest gap. Here's the retest, right? Also, this whole movement right here is a rest. That's a week, my friends. Actually, a little bit more than a week. So patience is a virtue in trading. Let it do its thing. Let the money work for you. Don't stress about it. Be in. Let it ride. I saw another one when I was looking at these. Give me a few seconds. Let me see if I can track that one down again. Ba-da-da-da-da. Where is this tweezer top? There's a tweezer top that I was looking at, but I guess I have lost it. Again, I'm just trying with my eyes. I could have easily scanned for these. And the scans, they do work. Here's the one I was looking for right here. So these are almost, this is 1 penny away from the high. Right, 1 penny, and that right there is that one black crow pattern I was talking about just a second ago. You can look at this candle and you can see, right, anyone who bought at the close of the prior day is automatically losing money the next day. So the close of this candle, 35.47. The open of this candle, 35.40. So it gaps down 7 cents and then trades all the way up to the high of yesterday. All the way up. Right, the high of this day was 35.49. The high of this day was 35.50. So technically, this is like a tweezer topish, one black crow, bearish engulfing pattern. AKA, I'm going short. Matching that with a previous high, right? A lower high, entry here, stop there. Letting it do its thing. Right now we can see how it played out, and we can see that it wasn't really that magnificent of a trade. It was only okay. That's all right. Low of these two candles are very close. Low of these two candles are almost a tweezer bottom. Not quite. In this situation, if you had gotten into this pattern here with a stop there, right, you would have gotten triggered in on this day, on the pullback, right, on that bearish candle. Didn't look good. A week and a half later, you're moving up the stop for that bullish trade, I'm assuming, to right about there. And then you got stopped out for about half an hour of a loss. So if you took that bullish engulfing pattern, that almost tweezer top pattern right here, yeah, you would have lost on that one. If you took the bearish trade, right, then you would have made up a little bit on that particular trade. If you got in bullish with shares right here, and you got in bullish there at the red line, you could have bought puts right here at the green line, and you could have protected yourself as the stock is doing that. And then when it double bottoms, right, you're still in your shares, and then the trade continues higher. All kinds of things to do in trading, folks. All kinds of things to do. It just all comes down to the plan. Let's go look at another stock, and this is Visa. This is one I had a few real life traders ask me about when this pattern came up, because it was a pretty bearish pattern. This was a tweezer top of the ages. Check this pattern out. Very, very interesting tweezer to say the least. And you probably remember why. But these two candles, if you look at the H, they're going to have the exact same high. High, 113.62, 113.62, exact same high. Remember earlier, I mentioned if that second candle, the bearish candle, is a huge candle, which sometimes happens, hop in to a shorter term time frame, like an hourly chart, and try to play it a little bit more aggressively. So what's cool about this is even though you got the tweezer top around here on the hourly chart, which I'm sure I could probably zoom into that, you're going to see some reversal signals. 11:30. I got that song in my head. I'm all the way up. Here's the 11:30. So this is the tweezer pattern right here. And there's your little head and shoulders pattern on the hourly chart. You could have got in with a break below that support right there, potentially. Since it was a very strong tweezer, you could have just bought puts around here somewhere because it retraced and had your stop right there, right? And just above the tweezer, and it kind of would have worked a little bit. But when you see a massive, massive candle, let's hop back over to the daily chart. You see a massive candle like that. I mean, it's magnificently huge. You see that lower shadow. That lower shadow is now a point of contention. That is a support level. That is a pivot price. That's a new support line, my friends. So who do you think bought right here? Let's call them the red traders. So when the stock sold off, right? Look at this trend on Visa. Is the trend bullish or bearish? It's bullish, unquestionable. Very strong bullish trend. It pulls back. What do you think those people were doing? Hashtag buy the dip. There were people buying the dip. It makes sense. As the stock was pulling back, they were buying into the strength of that trend. So when they bought into the strength of the trend, that's 4 or 5 points right here. Easy. So they bought the dip, and then some people probably sold. Stock trades back down again, and then who do you think bought there the second time? The exact same people who bought there the first time. Same exact people. Remember, if it's in a very strong bullish trend and you're trading the tweezer top, that's cool. Just be quick about it, because they're not a guarantee that the market's going to roll over, but they can give you some good insights, as I mentioned earlier, into what the stock might do. If you're looking at going bullish on Visa and you saw this tweezer top, you go, okay, let me wait for a little bit more of a pullback. And then this would have been your secondary pullback right here. In fact, check this out. Pull up to 50. Look at that. Nice little pullback to the 50 EMA. That's where people were buying. The other interesting part about Visa, I have a few real-life traders in shares of Visa, and they were asking me if we should sell right there. And I said, well, let's give it about a week or two, maybe 3, because if we close above that high, remember, if we close above the high of a strong tweezer top, the trend will continue higher. For how long? Who knows? Right? No one knows that answer, but continue to be bullish if you're already bullish is the answer. And you can see what happened on Visa. I mean, we got some closes above there, and we can see, it's just cranking out. Really, really strong moves. And all of this is right here, a rest, a pullback, a retracement, a consolidation, same thing over here, whatever you want to call it. That's why the trend is your friend. The trend is bullish. If you're looking at going bullish, look for good places to buy the dip, the tweezer top, allowing you, because you could have seen that before the candle closed if you're watching the market. But if you came back and you saw that tweezer top on Visa, you could say, okay, if we close below the low of that lower shadow, then yeah, let me wait a little bit longer before I go bullish, right? Because that's how you would trade it bearish anyway. If it was just a regular tweezer, you'd be getting in with a break below the low of that tweezer. But since this giant lower shadow is here, that lower shadow obviously represents buying pressure. You're going to want to wait for a close below that, because that would be the trend reversing, slowing down, or pulling back. Unless it get a close below a certain level, and a lot of people are absolutely trapped, you're looking to buy the dip. Very, very strong move on Visa. Let me see if I can find another tweezer while I'm here on Visa. Let me look around for a second. This candle pattern right here, 2 pennies away from a tweezer bottom. 2 pennies away. And you can probably see that this candlestick pattern right here is also a morning star type of pattern, right? You get a strong, obvious bearish candle. Second candle is an indecision candle, and then the third candle, you get a bullish candle. That's a morning star reversal. The fact that you get a morning star reversal with an almost exceptionally perfect tweezer bottom, and the third candle is a one white soldier, right? So the close of the bearish candle was 102.94 and the open is 103.07. That means the third candle gapped up after the close of the second candle. How are you not going bullish right there? What is your rationale exactly? I need to know. What's the fear? Because your entry is here. Your stop is below that 50. The trend is already bullish. Get in. There's no, at that point, remember, you cannot be afraid to lose money. You can't be afraid to be wrong. You can't be afraid to get into a trade and it reversing against you. Those all will happen. Those are guarantees. If you are terrified and petrified and mortified of things that are going to happen, that are guaranteed to happen, your life is not going to be a very fruitful life. If something's going to happen for sure, then don't worry about it. Like if you're terrified that the sun is going to come up tomorrow, or it's going to be night at nighttime and the lights are going to go out, you know, candlesticks are the least of your concerns. Here's another thing on Visa, another good trade right here. So this is another Morningstar reversal. Obviously not a tweezer bottom at all, but again, just a great Morningstar. That second candle, a one white soldier, new white soldier candle, just a beautiful bounce right off the 50. I mean, again, your entries here, stops there. Very nice trade. Let me go look at Google. I mean, bottom line is, if you ever find a tweezer play on Google, you just play that. Here was the most recent one that I remember on Google, because we did play this one. And this was right here. And again, this is almost a tweezer. In Google land, it's close. Not exactly, but it's close. And this particular pattern right there. So with that candle, again, you could have either gone bullish with calls, which worked for a little bit. Shares, you had to hold for a little bit. I already knew it was going to be a distribution phase. So that would have been a great time to get into some bull put spreads, right? This particular pattern right here, not, again, a textbook tweezer bottom, because both candles are white. But again, we can still look at the sentiment and we can see, long lower shadows, almost the exact same low. I'm looking at getting in bullish. Check out this recent pattern on Google right here. So the low of these two candles, they're off by 32 cents, which again, on a $1,000 stock, not that bad. Almost a tweezer bottom. Fantastic spot to be looking at getting in. Again, once it forms, right, you might not know it is what it is until it forms. But once that forms, there you go. Nice trend. What are you doing down there? This is the part where it comes down to the strategy. Are you going in with calls, shares, bull put spreads, put sales? What are you doing? But anyway, Google doing its thing. I do not remember any recent tweezer bottom patterns on Apple. However, this one is pretty dang close. The low of these two candles was off by 4 pennies, and this was a one white soldier candle. I was really excited to see this one, and I'm very excited that I'm very confident that Apple will continue higher at this point, because it's an incredibly strong candle pattern. So very nice candlestick pattern off of the 50. The lows of these two candles, let me just hide everything right here. The low of these two candles, again, 3 cents away from being a tweezer bottom. And you can see how we did end up going higher. These two candles right here, about 40 cents away from being a tweezer bottom. So you can see the sentiment is still pretty much there. It's just not the exact same. Tweezer highs. Here's the high. This one's off by about 40 cents. So again, not perfect tweezer bottom or tweezer top. I'm just looking for some tweezers. This one's off by a penny. So again, not a perfect tweezer pattern at all, but very close. The interesting thing about this pattern is the strength of the preceding candles, right? Those are some really strong bullish candles, and these things are pretty measly. So granted, I could say at this point, yes, if we take out the lows of that bullish candle, because you can see, let me actually zoom in a little bit more. We can see that the bullish candle is bigger than the bearish candle. Okay, bullish candle is bigger than the bearish candle, and in fact, the bearish candle makes higher lows. So you have these ginormous bullish candles and two really pretty measly candles. I would say, yeah, that could be a tweezer top, but more or less it's just a rest. And if we break lower, it'll be a dip buying opportunity. I can say I probably said that verbatim back in April. I'd have to go back and check, but I probably said those words exactly. End of March, early April. Saying, hey guys, strong, very, very strong trend. This is not really a tweezer pattern. Very small candles. It probably just states if we do break down, it's probably a soft pullback by the dip. And then you got, a phenomenal gap and go. You got another gap and go. You had all kinds of signals to be bullish on Apple back then, and that was a fun trade. Those are really exciting. These two candles have almost the exact same low, but they're not a tweezer. Right? You have a white candle followed by a black candle. So that is the same formation as a tweezer top, but it's not out of resistance. You could call it a tweezer top. You could also call it a new black crow or something. And in fact, on Apple, on that day, I absolutely said, hey guys, if we take out that low, this is not good. You know, if we break the low of this bullish candle, you have this bullish candle, this is a bearish candle. If we break below here, Apple's going to go a little bit lower. Not a lot, but maybe down here somewhere. And we can just see it never did that. There were people buying at that level right there. The same exact people, let's call them the purple traders. Same people who bought there and made money. They did it a second time, they did it a third time, they did it a fourth time, and they got paid off. Big time. And then you had a white candle gapping up to a resistance, retest gap, it retested bounce, retested bounce. Again, who do you think bought right here? Old resistance, new support. Let's call them the purple traders. They bought there, made money. They bought there again, made money. Bought there again, made money. Got another bullish gap and go. It's candles. If you master candles, ladies and gentlemen, you really understand the sentiment, you can trade profitably. You will have the ability to enter correctly, to exit correctly. You can just look at just this chart right here. This is the language of money, candlesticks and sentiment. You can truly, if you master this language, make money doing this. It takes a little bit of time, just like if you're trying to learn French or Italian or Portuguese, Mandarin, whatever you're trying to learn, it's going to take a little bit of time. Learning candlesticks will take practice. It'll take dedication. It'll take asking questions, getting wrong trades, getting right trades, making money, losing some money, but asking yourself, what is the sentiment of the trade? What are people thinking? What are people feeling? And the best way to answer that is by you saying, how would I feel in this particular situation? And just going and looking for those approaches. This is another pattern that is about 16 cents away from a tweezer top, right? So it's pretty close. It was a bearish gap and go right here. White candle, gapping down. A break of that support was going to be a really strong move because you had nice lower shadow, really good volume, almost a tweezer top. It was also a new black crow candle because this opened and closed below the previous day's white candle's close. Then you got this candle, which kind of hung out right on that support. Very small indecision candle. That indecision candle says, I have no idea what we're about to do, but whatever we're about to do, we're going to do it. Could have popped higher, could have popped lower, it popped lower. And Apple had a very, very good pullback, and it pulled back into old support, very close to it. Didn't quite get down there. I didn't buy Apple right there because it didn't actually hit that level. But after it started getting, there's your new white soldier candle. There's the bullish pop. And once this candle comes in with that volume right there, you have a pretty good idea that is the area, that's the slowdown of which we're going to be pausing a little bit. And here's your long-term moving averages. That was also right on top of the 100, right on top of the 200. This is where you're going bullish on Apple back then. So anyway, I hope this was helpful. Just a kind of a quick review, some tweezer tops and tweezer bottoms. If you have any questions about this, please let me know. My goal is to help you all trade prolifically, profitably. Nice! Awesome job. You made it all the way to the end of the video. Super proud of you. Thank you so much for doing that. I hope this was a good takeaway. Again, just as a reminder, these patterns can work on any time frames. Now, I will mention they're a lot easier to find on the smaller time frames, right? Because stocks don't trade as often. But if you can find them on the bigger time frames like hourly, 4-hour charts, daily, and of course weekly or monthly, they can be very, very powerful candlestick patterns. Some incredible sentiment to be gained from these candles. I hope you enjoyed this session of Real Life Trading's educational platform, content and information. You rock, and I'll see you in the next video.